Hey, what's going on, guys? This is Greg from Idea Trading Ideas, and as you can see, we have Denison Mines on the screen. It's a Canada traded company or a Canadian traded company, energy industrial, right? So currently the price is 115. They're up 1 cent over the past day, or positive 0.88%, and they haven't changed anything over the hour. What we're going to do is go ahead or after hours, what we're going to do is go ahead and go through the charts. Weekly chart up 6 cent or positive 5.50% over the past week. Monthly chart up positive 10 cent or positive 10.05% over the past month. 3-month chart, we're down 26 cent or negative 18.44% in the past 3 months. 1 year, we're up 72 cent or positive 167.44% over the past year. 5-year chart, we're up positive 66 cent or positive 136.72% over the past year. What we're going to do is scroll down to show you where I'm in at. Average cost of $1.10. We own 400 shares. It's 6.23% of our portfolio diversity, and today's return or yesterday's return was $4 or positive 0.88%, and our total return is $19.44 or positive 4.41%, right? Total return. And overall, it's $460 in terms of our market value. Like I always tell you guys, hey, if you buy these shares right out, obviously you have opportunities to kind of sell, right? So if we bought them straight out at 110, which is what we actually did, kind of averaged down to 110, and if we decided to sell at 115 right now, that's a 5 cent difference. Obviously we own 400 shares, so we will automatically say, well, 5 cent difference, 5, 10, 15, 20. That will be a $20 gain, or mostly what you see right here, 1944. And we could sell off right then for that profit. But what I like to do is I do cash secured puts and covered call options, right? So as you can see, we have 4 contracts in play right now. This one right here being the contract that we decided to do to sell at $1, right? So back then the share price was really low, and so we decided to do a dollar sell call option. Average credit per share was 11.5, right? So basically they gave us 11 cent or almost 11.5 cent per share, right? So the break even was 112. We did 4 contracts. They credited us $46 up front. And as you can see right now, this thing is negative 72. So right now the same contract would be worth about 72 bucks. And total return right now is negative 26, right? So, or negative 56.52%, which means that if we decided to buy to close, which is this right here, if we decided to buy to close this contract, we would have to pay them back $26. Now, are we going to do that? The answer is no. We're going to go ahead and let this contract sell off for $1 because we're not married to these shares, right? And we've already collected quite a bit of money, and I'll kind of show that to you right now. So I scroll back. What I'll do is go down to my history, and we'll click on show more so you can get a better idea. And it shows you that, hey, on April 20th, I collected $10 for 1 contract. On April 19th, I collected 36 for 3 contracts. And on March 22nd, I collected 39 for 3 contracts. So when we add those together, what we'll do is pull out the calculator real quick, make sure we got everything right. 39 plus 36 plus 10. That's going to be $85 that we collected over this time frame, right? So they've given us $85 so far, right? So what we're going to do is close out the calculator. We're gonna go back, and now we know, hey, we've collected $85 on the contract, and we're actually gonna end up selling off all our shares for $1, right? Which means we're gonna lose $40 off the deal as of right now, right? Because we're in at 110. So I'll show you my spreadsheet, and I always tell you guys to make sure that you have a spreadsheet set up so that you can keep track of what's going on when it comes to your deal. So we're going to be looking at this one right here, Denison Mines options contract, and as you can see, we have stocks for covered calls. DNN is ticker symbol, 400 shares, original cost 110, $440 was actually spent. We show that we received basically 9 cents for a premium for the month of April, or $39. May so far 11.5, current a total of $46 or 10.45%. Obviously April was 8.86%, and then we already have that we're going to be selling at $1 or $400 total, which is 400 of our 440 back, right? Which is going to be 90.91%. Overall, we're going to collect 110%, 110.23% to be exact, and that's going to put us at a positive $45, right? So yes, we've been in the trade for about almost 2 months, and we're going to collect basically $45. Is this the end for us when it comes to DNN? The answer to that question is no, and the reason why is because we have another trade setup coming up, right? So we're going to be looking at this one right here, which is possible option trade idea number 4, but it's going to be number 5, and we have it right here, 18 June 21. DNN is the ticker symbol. Sell put, which is going to be a cash secured put. Current price 112. Obviously that's changed to 115 now. Purchase price is going to be $1, so we're going to put in to purchase or try to purchase at $1. We're going to do the same thing, 400 shares. It's going to cost us $400 up front, or actually it's going to put it as collateral, 400 bucks. Option strike price is $1, which is equal to the purchase price. And then the option premium paid to us up front is going to be 8 cents per share, or $32 up front. And the percentage is going to be 8%, right? So option premium plus or minus share cost is going to be $368. So basically what you're going to do is minus off the $32 from the 400 that you put up, and this is what you actually are risking at that point, $368, and it's going to take 30 days for this contract to go through, right? So on 18th June, this contract will either expire worthless, or you will be assigned the 400 shares at $1 a piece, or $400 total, right? But you would already receive the $32 up front. So this is another trade idea that I have about DNN, because hey, I want to try to get back in at a lower cost if I can. Anyway, what I'm going to do is go back to Robinhood, and I'm going to show you how to do this trade. Trade DNN options. What you're going to do is click on sell put, and as you can see, it's expiring on the 21st, which is this Friday. Dollar strike price, current share price $1.15, and they're not offering anything right now, 1 cent or $1 to do this deal. So they're not offering anything. So what you want to do is go ahead and change that to June 18th, which is what we had inside our spreadsheet, right? Dollar strike price, current price 115, and they're willing to give you 8 cents for this particular deal, or 8 cents per share, or $8 per 100, right? 100 times 400 shares, 8 times 4 is $32, right? So anyway, what you're going to do is click on the plus sign, short call, 1 put, -8 cents, total credit 5 cents, right? Obviously we know that Robinhood kind of cuts us down and averages stuff down to like 5 cents, especially for these contracts that trade below $3. So we're going to click on continue. We're going to type in 4. You see that says 5 cents. We can go ahead and put 8 cents in if we want to. In this case, what I'm going to do is I'm just going to put in 10 cents with the anticipation of the price going up in value at some point, right? So what I'll do is put 0.10 in. As you can see, the minimum credit will be $40 right here. So as you click on review, it says not enough collateral right now, obviously because we haven't freed up the cash for this particular trade. But what's going to happen is it will go through, and when the market opens, whether or not the price goes up or down, it will decide whether or not it's going to be selected, right? But anyway, let's just say it went through. We would receive $40 up front. $400 will be put to the side as collateral, and this trade would not be over with until June 18th, or unless you decided, let's say the price right here dropped all the way down to 1 cent, and you decided you didn't want to keep your money as collateral anymore, which means you would go ahead and buy to open. I think, if I'm not mistaken, I'll go back one, and yeah, so you'll basically buy that position and then close it out, you know, which means you'll be paying back a couple of dollars. But anyway, hopefully you learned something about doing a cash secured put. As you can see, I have a cover call in right now, but hopefully you learned something about doing a cash secured put from this channel. And if you have any question, always just go ahead and drop it in the comment box. Please like, subscribe, comment on the channel. I'm going to continue to drop these videos as time goes on. You guys have a great day. Enjoy yourselves. Bye.